Hello everyone, welcome to the market opening bell for Tuesday, February 3, your 10-minute guide to the stock market. In the Asian session Monday, commodity markets remained volatile and Hong Kong stocks fell. The Hang Seng Index opened 289 points lower and saw its losses widen in the afternoon, dropping as much as 879 points to an intraday low of 26,507 before closing down 611 points, or 2.2% at 26,775. The H-share index fell 236 points, or 2.5%, to close at 9,080, while the Hang Seng Tech Index declined 191 points, or 3.4%, to finish at 5,526. Total market turnover for the day reached HK dollar 347.8 billion. Southbound funds net bought HK dollar 1.907 billion worth of Hong Kong stocks. Among the major inflows were net purchases of Tencent holdings for HK dollar 1.304 billion, Xiaomi Group W for HK dollar 277 million, and China Life for HK dollar 187 million. On the sell side, net outflows included Hua Hong Semiconductor for HK dollar 651 million, Zijin Mining for HK dollar 464 million, Sino Biopharm for HK dollar 392 million, Alibaba W for HK dollar 328 million, and SMIC for HK dollar 161 million. According to statistics, southbound funds have net bought Xiaomi for 3 consecutive days, totaling HK dollar 1.834 billion. They have net sold China Mobile for 21 straight days, totaling HK dollar 16.044 billion. Net sold Zijin Mining for 6 consecutive days, totaling HK dollar 4.25 billion, and net sold SMIC for 6 consecutive days, totaling HK dollar 1.389 billion. Technically, the Hang Seng Index gapped lower at the open, forming an island top pattern together with last Wednesday's upward gap, while also breaking below both the 10-day and 20-day moving averages again. The 20-day line at 26,832 points, the 10-day line at 27,030 points, and the bottom of the downward gap at 27,100 points will serve as short-term resistance for any rebound. Further support below lies at the 50-day line around 26,200 points. China's major A-share indices opened lower and saw losses widen, with the Chinex board swinging from gains to declines. The Shanghai Composite Index closed down 102 points, or 2.5%, at 4,015 points. The Shenzhen Component Index fell 381 points, or 2.7%, to 13,824 points. The Chinex Index dropped 82 points, or 2.5%, to 3,264 points, with combined turnover across the Shanghai and Shenzhen markets reaching RMB 2.58 trillion. The central parity rate of the renminbi against the US dollar was lowered by 17 pips to 6.9695 per US dollar. The January RatingDog China Manufacturing PMI came in at 50.3, above the market expectation of 50 and up 0.2 percentage points from the previous month. It has stayed above the 50 boom-bust line for 2 consecutive months, indicating continued improvement in manufacturing sentiment with slight expansion and the fastest growth pace in 3 months. This was mainly driven by increases in new orders, including overseas ones, along with a modest acceleration in output growth. In response to rising business and efforts to clear backlogs, companies increased employment and procurement volumes. However, business confidence fell to a 9-month low in January, partly due to cost concerns. The latest survey showed the strongest increase in business costs in 4 months, which led to product selling prices rising for the first time since November 2024. There is a divergence between the official PMI and RatingDog PMI, likely because the official sample leans toward large state-owned enterprises and heavy industry, while RatingDog's sample focuses more on small and medium-sized, private and export-oriented firms. The private PMI is more sensitive to coastal export-heavy provinces like Guangdong and Zhejiang, performing better than official data when Southeast Asian orders rise. At the same time, January saw intensive pre-Lunar New Year early shipments, affecting private enterprises' production and logistics, while large state firms maintain a steadier pace. China's Ministry of Commerce and other departments released the Happy Shopping Spring Festival special activity plan for 2026, which will run from February 15 to 23 during the 9-day Lunar New Year holiday. Support measures include guiding cities piloting reward invoices to increase bonus payouts during the holiday, encouraging regions to boost subsidies for trading in old consumer goods for new ones during Spring Festival, enhancing support for offline physical retail, and urging financial institutions to collaborate with key merchants on exclusive Spring Festival promotions. China's Ministry of Finance and State Taxation Administration jointly announced a new VAT classification that includes mobile data, broadband access, and SMS, MMS under basic telecommunication services, raising the tax rate from the previous 6% to 9%. Following the announcement, the three major Chinese telecom operators all indicated negative impacts on revenue and profit, with share prices falling 2 to 6%. According to brokerage estimates, China Telecom 00728 and China Unicom 00762 could see earnings per share affected by 14% and 15% this year, while China Mobile 00941, with its higher profit margin, is expected to face an 8% impact. Without raising dividend payout ratios estimated at 77% for China Mobile, 78% for China Telecom, and 65% for China Unicom, the three operators may see declines in both EPS and DPS in 2026. This tax rate hike is a one-time adjustment, and growth rates should normalize from 2027 onward. Since voice call VAT was already at 9%, that service remains unaffected and will not see price increases. However, broadband access, SMS, and similar services moving from 6% to 9% could lead to potential price hikes. If mainland operators can pass the tax increase on to users through pricing, growth may improve after 2027, though caution is warranted in the current mild macroeconomic environment. Macau Gaming Stocks rose against the broader market trend. Macau's gaming revenue in January reached MOP 22.633 billion, with daily average revenue of about MOP 730 million, up 24% year-on-year and reaching about 91% of the same month in 2019 levels. The figure exceeded market expectation by roughly 5%. Looking ahead to February, seasonal weakness is expected due to the Lunar New Year, with the quiet period likely running from February 3 to February 18 and the peak in the 5 days following the holiday. February gaming revenue is projected at MOP 20.5 billion, or a daily average of about MOP 732 million, implying 4% year-on-year growth. After adjusting for differences in Lunar New Year timing between this year and last, the combined January-February gaming revenue forecast is MOP 43.1 billion, representing 13.5% year-on-year growth. China Eastern Airlines 00670 announced that in 2025, China's economy operated steadily with progress amid stability, and the civil aviation passenger market showed robust development. The company completed total transport turnover of 27.981 billion ton-kilometers for the full year, with passenger volume nearing 150 million up 10.82% and 6.68% year-on-year respectively. Total profit is estimated at RMB 200 million to RMB 300 million, achieving a turnaround to profitability. However, due to the reversal of some previously deductible loss deferred tax assets under accounting standards, income tax expenses increased, resulting in net profit attributable to shareholders of negative RMB 1.3 billion to negative RMB 1.8 billion. After excluding non-recurring items, shareholders' attributable net profit was approximately negative RMB 2.7 billion to negative RMB 3.3 billion. Mainland energy drink manufacturer Eastrock Beverage 9,980 will begin trading today. Yesterday, in the grey market on Philip Mart, it closed at HK$ 250, up 0.8% from the IPO price of HK$ 248, yielding a paper profit of HK$ 200 per lot of 100 shares. Despite declines in Bitcoin and precious metals prices, US stocks rose, with the fear gauge VIX index falling 1.1 points, or 6.3% to 16.34. Gains were led by traditional cyclical stocks like Caterpillar, up 5%, and Walmart US up 4%, pushing the Dow Jones Industrial Average up 515 points, or 1.1% to 49,407 points. The S&P 500 rose 37 points, or 0.5% to 6,976 points, and the Nasdaq climbed 130 points, or 0.6% to 23,592 points. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, fell 50 points, or 0.7%, to close at 7,681 points. Disney US reported first quarter results better than expected, but warned of declining visitor numbers at US theme parks, sending the stock down over 7% and making it the worst performing Dow component. Nvidia's share price fell nearly 3%, amid recent market rumors of dissatisfaction with OpenAI, developer of ChatGPT, and a potential stall in a planned $100 billion investment. Nvidia CEO Jensen Huang personally clarified that the reports were completely baseless, stressing no dissatisfaction with OpenAI and confirming plans for a massive investment that could set a company record. Tesla, US announced on Weibo that its third-generation humanoid robot is about to debut with expected annual production of around 1 million units. The post stated that the Tesla humanoid robot is redesigned from first principles and can learn new skills simply by observing human behavior. With a fully independent supply chain and all components designed from first principles, the ramp-up to mass production is expected to take longer than for vehicles. Once scaled, the cost per robot is projected to be controlled at $20,000. Reports indicate that Alphabet's AGOOGL, US autonomous driving unit Waymo, is preparing a new funding round targeting about $16 billion, implying a valuation of nearly $110 billion. Alphabet is said to provide around $13 billion, with the rest from investors, including Sequoia Capital, DST Global, and Dragoneer Investment Group. Waymo stated it does not comment on private financial matters, and Alphabet also declined to comment. As Bitcoin fell below $80,000, Robinhood US dropped nearly 10%, and Bitcoin heavyweight MicroStrategy MSTR US fell nearly 7%. Palantir Technologies PLTR US saw quarterly revenue and profit beat expectations, with guidance far exceeding forecasts, sending shares up 7% in after-hours trading. The company reported fourth quarter revenue growth of 70% year-on-year to $1.41 billion, above the expected US dollar 1.34 billion and marking its highest quarterly revenue ever. Net profit also hit a record high at US dollar 609 million, with adjusted EPS of 25 cents, beating the expected 23 cents. For fiscal 2026, Palantir expects revenue between US dollar 7.18 billion and US dollar 7.2 billion, implying 61% year-on-year growth, well above the expected US dollar 6.3 billion. For the first fiscal quarter, revenue is projected at US dollar 1.53 billion to US dollar 1.54 billion, also surpassing the market's US dollar 1.45 billion expectation. The Institute for Supply Management ISM released data showing the US January manufacturing PMI rose from December's 47.9 to 52.6, far above the market expectation of 48.5 and marking the first expansion in 12 months. Due to a partial government shutdown, the U.S. Bureau of Labor Statistics will not release the January employment report as scheduled this Friday. OPEC Plus announced agreement to keep crude oil production unchanged next month, even as oil prices hit 6-month highs, amid market concerns over potential U.S. military action against OPEC member Iran. The group had frozen its planned January to March production increase last November due to weak seasonal demand. US President Trump stated that Iran is seriously negotiating with the United States, hinting at possible easing of tensions, which reduced investor worries about Middle East supply disruptions and led to a 5% drop in oil prices.
Our stock pick today is Pico Far East, stock code 752. Pico Far East is primarily engaged in exhibition planning, promotional project design, and video content production. Its business units are spread across 37 cities in 23 countries worldwide. As a comprehensive brand activation enterprise, the group leverages content, social media, creativity, technology, and data strategies to deliver integrated brand experience solutions for global clients. The group continues to advance its existing strategies to build a resilient and sustainable growth business. The latest announced annual results for the year ended October 31st, 2025 confirmed the effectiveness of its operational strategies and approaches. During the reviewed fiscal year, the group recorded total revenue of 7.208 billion Hong Kong dollars, an increase of 13.9% compared to the same period in 2024. Profit attributable to shareholders was $436 million, up 21.9%. The board recommends a final dividend of 9 Hong Kong cents per ordinary share, compared to final dividend of 7.5 Hong Kong cents for 2024 and a special dividend of 4.5 Hong Kong cents per ordinary share. Together with the interim dividend of 5.5 Hong Kong cents per ordinary share, the total dividend for the year ended October 31st, 2025 amounts to 19 Hong Kong cents, with a current dividend yield of approximately 6.8%. With the contraction in US-China trade, the Middle East region, along with Asia-Pacific countries such as Singapore, Malaysia, South Korea, Thailand, and Vietnam have become the main beneficiaries. As a result, the group's business volume and new clients in its offices across these regions have increased, particularly in Southeast Asia and the Middle East. In the United States, the group continues to focus on delivering integrated brand experiences, which not only helps strengthen partnerships with existing clients, but also enables its U.S. business to transition from customized experiential marketing to creating industry, disrupting brand events. The group excels at crafting brand events that resonate across diverse audiences and geographies, thereby forging deep and stable long-term partnerships with clients. To address market changes, the group has optimize its business segments into 3 segments. A. Brand experience activation, focused on all brand activation projects, including exhibitions, brand events, brand marketing initiatives, brand visual activation, and integrated brand experience activation. Segment B, meeting architecture activation, focus on event management and the development of intellectual property conferences, events, exhibitions, and festivals. Segment C, museum and themed entertainment, focused on brand activation in the cultural, educational, and entertainment markets. The group continues to emphasize the use of data tools and the AI-supported Pico Far One system to drive digital transformation by aggregating and analyzing data from a large number of projects. The group converts data into assets and value, identifying high-quality clients and cross-selling opportunities. This helps improve sales conversion rates and enables tailored assessments and solutions for various business units and projects, further controlling costs and enhancing gross margins. Recommended buy price $2.80, target price $3.20, stop loss $2.65. I do not hold the above stock.